Welcome to the FX, and here we're looking at the US dollar. And as you know, we're looking for a target anywhere from group 2 here to the 81 here, and the ECB announcements in terms of cutting rates into a negative territory and buying bonds as expected places pressure on the US dollar, of course. And look, we may have a high in through here. Now, in terms of how far will this travel and so forth, I think one of the main points here is that, well, the 80 here as support or resistance. Simple as that, really. So we just need to, for the bigger picture anyway, we need to allow the market to test 80, and let's see if it becomes the support or the resistance, and also the price action that's going to come as well. So basically, so far is that this move down here is pretty much in 5 waves, so we'll see some sort of retracement and then a testing of that 80 through here. But we have to be mindful, we don't want to call a bearish market in here just yet. It needs to be nice solid retested resistance for that. And it's pretty much the same for the euro as well in terms of the spike that's occurred. We knew that in the daily chart that the 135 was a really solid support as such. So we can see that here, if I drag this chart across here, just the daily chart here, at 135 here, we could see that. And even though the retracement level 1561 is lower, and yes, it could come down here lower as well, but we need to allow the US dollar to work through the 80, and we need to allow this market to work through its wave count as well. Now we can have the low in place here at 135, and the market can work higher from this point here. I think we just need to take it level by level, and also intraday wave count as such as well. Now the intraday wave count that's moved up through here, and this is on a lot of the crosses, appears to be in 5 waves. So if it's in 5 waves, then it'll have a counter trend and then another 5. So with that in mind, this is the 50-60% retracement level here at 138. But as you can see here at 137, this is where the first lot of supply is going to be in here. So the 137 is going to be a real, the real resistance as such. The halfway mark between 136 and 137 is 136.50. So we need that as a nice solid support there. And once we've got that as a solid support, then the market can eye the 137 up, which is higher there. So just on the intraday here, the spike does make it a little bit sort of tricky, and I'm not sure the best way to count this wave 4 here. We know we had wave 3 here, we know we're looking for wave 4 here, and should we count this as the wave 5 of wave C down through to here? I think so. So we can just leave that as is, and we can place that in here. And I mean, it'll happen pretty fast and whatnot, but that's that. Now this particular move up through here, if I got this on a smaller one through here, yeah. So just counting this while we speak here. So this is still a 5-wave structure all the way up here. This is the 3rd wave to here, the 4th wave to here, and obviously it's still moving here, and this would be a top of a 3rd here. This is the sort of reoccurring pattern of this one here. So it would be moving sort of higher. But once this 5 waves is sort of completed into the supply area at 137, then we need to look for some type of ABC correction here. But because we've got 5 waves up here, that means that we should get another 5 waves over here. So we'll do a little bit of work on this chart and post it in the euro section. But you kind of know that the 137 is going to offer the resistance, and it's really about observing some sort of 3-wave correction. And then once you've got that and you see the move up under this move down here, then that a move up through here, through that low, confirms that this is a corrective pattern, and then you can be assured of taking that high out through here. So that's what you're sort of looking for here. Normally when you're working with the 137, the closest largest number, then group 2 here and group 1 up here become the trading range in here for the swings across the 137. It can certainly come down to the 150 area here, but it's just good to work with group 1 and group 2 first, but be mindful of the midpoint here as well, because it is a strong point as such. So the Australian market, just on the daily chart here, we're looking to be long above the 9272, and we were sort of hopeful in calling this in as an A and a B and a C through here, and that's fine. The market's moved up here past the 61.8% retracement level of this move down through here. So obviously there's going to be resistance in this area up through here as such. So you'll just need to figure out that where that is there. I think I did write about it in the text where that point is. It's actually the 78.6 retracement level of this move through here. So look, in the bigger picture, if we're looking for a move higher into wave 5 up through here, taking this high out here of wave 3 here, then we need a few things. We need support on 93, which is the top of group 1, and that's important. I mean, it's trading above group 1, yes, but it's not come back and tested it as support just yet. So that will be important. The wave structure that, well, it's a little bit tricky once again, but the best fit that I've got at this stage here is keeping with my original count of the A wave, the B wave in 3, the C wave in 5, up for wave 4 here. This move down through here is in 5 waves, there's no doubt about that, but it just hasn't made a new low through here. So it's more like a truncated 5th wave. So the best fit I've got for this is that this is wave 5 here, and we're looking at an impulse wave moving up through here. And I've just labeled this as wave 1, wave 2 through to here, wave 3, 4 and 5 up to the 94 area. This is where the 78.6 retracement level comes in. This is where the resistance is going to come in from 93.72 to 94. And if we do get 5 waves up through here, then we will see an ABC correction coming in, across this sort of 94 level here. And once we can confirm that is a corrective pattern, then we can move further to the upside there. If you've got long positions at 92.72 and 93, you've got a choice here. So the choice is either you take the money off the table basically now, or allow all of this to play out through here and look to add on top of the 94 here. And we can look to add on any pullback in through any pullback in this whole area through here. So every time it comes back into this line here, then you can look to buy again. Otherwise, you can use the levels. The 93.30, the top of subgroup 1, hasn't been tested as support yet. So this market can move back into 93.20 area through here without a problem as such before we see it moving up. Support on the midpoint 93.50, yes, you can add on that as well, and the 93.72 here. The thing is though, the retracement level, the correctional pattern across the 94, you'd need to hold through that if that was going to be your plan. If you're not going to hold through it, then you may as well take the money up here a little bit higher through here. Alrighty, the Euro Australian, now it had a bit of a spike down like the Euro did into the 145 area. I'm a little bit unsure about this countdown through here now. It could count as a 1 and 2 and 3 and 4 and coming in for 5 through to here. I'm unsure about that particular thing here. I know that the indicators are coming in and sort of supporting this. We are looking for a low because we've got 1, 2, 3, 4, and possibly 5 to here. So we're still looking for that rally here. We'd need to get confirmation of a move up, up through here in terms of an impulse wave. But if the euro is going to push higher, well then, and the Aussie will then, and the S&P 500, well then we're going to see this move up as well. So, it does look impulsive like the euro and so forth. So support on 146.30 would be the aim through here. Now, if you were short, because we were short in this market and we were looking at 146 here, so you may have gotten out, you may not have, markets spiking around a bit, then I suggest that you bring the stop down. I mean, this can fade from here and move further down here as well. So bring the stop in, take 50% profit here, bring the stop to 146.53, just above here. The pound yen and the euro yen. Okay, the daily chart for the pound yen. Just want to point out here that, we understand that there's been good support on the 170 through here. So if we start getting an impulse wave from this low through here, it has the ability to continue to the upside. And I have we were working this as a sort of a triangle pattern through here, but it can be counted in other ways as well. That's why we just need to be a bit flexible and just sort of focus on what's important. And I think what's important here mainly is the 172 as a nice tested support, and that would come in terms of looking at 5 waves moving up through here, which is nearly complete, and then we'd see an A and a B and a C across here in one format or another. And if support is found after that, then we can move up long from that point there as well. So in just drilling in here a little bit, I've taken the two sort of extreme counts here, and the first one is that we've got the A wave to here, and then an A and a B and a C here. And what we've been doing so far is looking for 5 waves up through to here, and then looking for a retest. But this could also be wave 1 here as well. So I'm very mindful of that. So my main goal here really is once this 5 waves is completed through here, then we'll be looking for a counter trend here, and then we'll be looking to go long. Now, the counter trend can pull all the way back down to its 50-60% retracement level. It may not do that. It may just pull down to the 4th wave of 1 lesser degree. That's viable as well. The other count is that we see this A, B, and a C wave up to here, and then an E wave down here to complete wave 4, and then a move up through here. So I don't think that's the case. However, let's just sort of, this is a longer term trade here, so we have time to sort of chill out here. I'm just discussing it a little bit. So basically 5 waves up here, an A and a B and a C here, and then we'll be looking to go long from that point there. The current move up through here is not quite complete just yet. It's a little bit scrappy to count to because of the wave, the ECB mentioning its things. So we can have wave 1 to here, wave 2 to here, wave 3 to here, wave 4, and looking for wave 5 up here, which would be the 1, the 2, possibly the 3 to here, the 4 and the 5 here. So we're reasonably close through here, and we know that these markets are going to push a little bit higher still. But we really, in the bigger picture, we want that, we want that ABC pattern as such, and we know there's good support all through here. So it could be quite sort of shallow at the end of the day. We might end up with something from the midpoint or something somewhere up here in terms of an A and a B and a C wave into this sort of area here, and then a move up here. But we're looking for something like this here before moving in. The euro yen is a little the same as well, slightly sort of different. We were looking at 5 waves moving up through to here, and we're looking for a B wave to move back to 139. So obviously it's sort of done that. So we're looking for this move up into this area here as well. But at the same time, I may not sort of worry too much about the spike as such, but what we will be looking for at the end of the day will be some type of A, B, and C correction across here. And if we get support after that, then we'll be looking to go long from that point there. So it needs to work across this level to get our timing right. And and if it after it makes these reference points here, these are ones that will be trading long off. And if they're not forthcoming, well, then obviously it'll move down. We're not going to make any difference anyway. And then we'll have to wait again for it to come into play. But they could be coming into play. The daily chart here is definitely moving into the oversold, overbought area in this space here. So we can expect that to correct here. But the pound yen is a bit stronger, so the pound is stronger than the euro, so to speak, if you put those pairs together. So we'll probably go for the pound yen. Right, okay, well that's it. Cheers, enjoy the weekend.